Welcome to Best Practice in Accounting with me, Rob Brown. This is a weekly podcast going out as part of the Accounting Influencers Podcast Network. I'm usually here with Martin Bissett, but in a series of special guest slots, we have Lucy Cohen with us today from Mazuma. Lucy, good day.
Hi, Rob. How are you?
We're doing great. And it's wonderful to have you with us because you are on the coalface. This is our practical Here's What Works episode that goes out to accounting practitioners all over the world, Lucy, and you are doing it. You're running a firm, you're employing people, you're coming up with best ways to do things. And what's on your heart today that you're going to share with our listeners?
It's an old favourite, Rob. It's the drum I've been banging for about 15 years now. And it's a lesson I've learned through bitter experience. And it's the ability and having the strength to get rid of your poor fit clients and to grade your clients A, B, C, D, and how you work your clients through that model. It's something we do ad nauseam at Mazuma. It feeds into every part of our offering, and it works its way through the images we use on our website, through our brand, through the copy we use, through the sales channels, through our communication routes. That client grading, that A, B, C, D, everything we do leads us to only having those A grade clients and only B clients that we can upgrade to A. And I don't see enough firms doing it regularly. I don't see them making it part of what they do, and they are suffering for it.
Well, let's ask that question. Why aren't they doing it? What's the consequences of not grading your clients?
So the consequences of not grading them is that you end up with a client base where, I mean, if we look at the statistic, A, B, C, D, call it 25% each, 20 to 25% of your clients are likely, just if you haven't got a strategy, by the fall of the dice, to be D grade clients. They are taking up your time, they are taking up your energy, they're not paying you enough money, and they don't fit with the thing that you are an expert at doing. They are, to put it really bluntly, stopping you growing your practice, and they are stopping you being the best practice you can be. They are ruining all of your efforts. A little bit like, if you've ever tried to get fit or lose a bit of body fat and you're super good all week, and then at the weekend, well, not you, Rob, you're far more disciplined than me, but you go out on a bender and you eat and drink all the wrong things, and you undo in those 2 days, you can undo 5 days of good work. That is what having C and D clients on your books does to your business. It undoes all of your good work on the other ones.
Well, your words were quite interesting. You said the strength and the ability. So I'd add to that the intention as well, because you can have all the strength, and let's say courage would be another word for strength. Yeah. You can have all the courage and the ability to dissect, to segment your clients. But if you don't want to do it or don't have the intention to do it, that's not going to work, is it?
Yeah, and I think that intention is a really interesting point. I think a lot of people intend to do it, or they
know they should do it.
They know they should do it, in their heads. They know this is something they should be doing. But there's this strange need to cling on to those clients, and it's either through a nostalgia. We all have a bit of nostalgia. I remember wagon wheels, if you're listening to this in the UK, it's a small biscuity sweet thing. They always seemed really big when I was small, and the nostalgia of them, they never taste as good as I remember they tasted as a kid. So the nostalgia, maybe
nostalgia is not what it used to be.
Nostalgia is not what it used to be. Oh, that's a dad joke, Rob. But yeah, it's maybe nostalgia. Maybe these were some of your clients that you first took on when you started your practice, and now you've outgrown them, but it's hard to let go of them.
You're talking about the fears here of what stops people from grading their clients. They might not be aware of the need to do it, but if they are aware that it's important to do it and they still don't do it, it's these fears of missing out on revenue, upsetting people, all of these barriers to actually doing it.
Yeah, absolutely. And fear is exactly the word I was going to use next. The fear, when I speak to practice owners about this, the fear that they have, kind of, there's a couple of them. The first is that the client will go around bad-mouthing them, and that they will go and tell all the other clients, especially if they work in just one geographic area.
Right, reputational damage.
Absolutely. They go around and say, well, this person's not taking on clients like us anymore, and they don't want our business. They're too good for us now. That isn't a thing. It doesn't happen. The next is that they will lose out on referrals from those clients. And I'll quite often get the objection, but those clients refer other clients to me. And then I'll ask, but what sort of clients do they refer to? They refer clients exactly like them, because we all move in similar circles. So you just end up with more clients that you don't want. So it's this it's very fear-based, and it's a really hard thing to break up with a client and to say, this is why you need strategies in place. When you do it, you need to work with other people to make that happen, and it's for both of your own good. It's for the good of you and your practice, and also for the good of the client, because let's face it, when you've got a D client, you don't want to pick up the phone to them. They're the last person's work you do. You kind of feel like, oh no, they're a real kind of sap on your energy. You don't want to work with them, and you're kind of doing them a disservice by doing it. So let them be with someone who's going to make them happy.
There is a way to let go of a client graciously.
Absolutely.
So that bridges are intact and you don't upset people. We could do a whole episode on that, but let's talk practically. Lucy, you've let go of clients, you've segmented your clients. The concept really is that the A clients are your best ones and your D clients are your worst ones. So let's ask you practically, how do you define which kind of client goes into which category?
So for us, our A clients, we've got a very clear client persona. So that is, it's a sub 500k turnover, fewer than 5 staff, and half our client base aren't even VAT registered. So they're that small. We're working in a real micro space. Instantly, anyone comes to us that falls outside of that remit, we just say no to. We don't take them on in the first place. So that helps us to do that. We make it very clear at the point of onboarding with clients that if they outgrow us, we'll need to move them on.
Because so you're managing expectations early.
Yeah, and we manage the expectations in our sales cycle as well. So I mentioned earlier, the copy on the website, the tone of our language, the demographics that we advertise to, and with Google and Facebook and that now, the insight you can get into who's looking at your ads is shocking. We can very clearly target only the people who fit our demographic. There's no point casting a wide net and wasting money on people who aren't going to fit. And then we do it in the sales cycle. And this is I'd say for us, the most challenging bit, because salespeople want to sell, and they have commission-based pay. So it's quite tempting for them to sell the wrong thing. So we have to very closely track churn and educate, train, and very much discourage people from making the wrong decision at sign up, because we want that long-term relationship with a client. We're not after a quick buck. So that's an education at the point of sale as well. And all those things combined, like, don't get me wrong, we did not get this right for a long time. When we started up, we did what everyone does, which is take on anybody and then figure it out later.
Yes.
But as we started getting it right, and when a client churns, we go, well, let's look at, were they the right clients? Was it them or us? And we analyze that, and even now, to really quite kind of granular detail. And that's how we do it, and we stick to it, and we keep reviewing what makes an ABCD client as technology changes, as the way we talk to people changes. Does that shift it? And we just keep defining it and keep going through our client base, and we do it periodically, probably every 6 months or so. Our staff work in pods, and we go through with the pod each set of clients, and are they an A, B, C, D, and then we take the appropriate action.
Yeah. And we've got so much data now in the accounting world, the fintech world, the software that you're dealing with. So segmenting your clients seems to be partly emotional and feel and gut and vibe and relationship and all of those words, but it must be partly on data too, isn't it? Hard metrics, hard numbers. Talk to us a little bit about that.
Yeah, it has to be hard metrics. The times we've had difficulty with it is when we've got an absolutely delightfully lovely client who is just gorgeous to work with, but they don't fit, and then you don't want to get rid of them because they're so lovely, and then you don't put their fee up, and they're not working, and that ultimately that relationship could sour because an expectation won't be met somewhere. So you have to at that point go, look, this is quit while the going is good, and let's kind of send them away with a hug. But yeah, that data is so important. And for us, it's all about, we measure things like how many transactions on average per month do they have? Do they use our MAS app, our technology, properly? How often are they logging in? How often are they engaging with us? And we can really start predicting who's going to churn based on the fact that they're not using things, or if they're asking too many questions, so maybe the level of support they need is beyond what we can offer them. That's a trigger as well. One we have is the number of first call resolution emails we can deal with. So if they have a certain percentage of emails that aren't done on a first resolution basis, that suggests they're requiring increasingly in-depth advice and advisory that our service doesn't really cover, because they're going back and forth and back and forth. And we have to look at that in terms of, well, is that a staff training issue? Is that accountant perhaps just not articulating properly what's needed? Or do they have, is their business growing and it's doing brilliantly, and they have more and more questions and more complexity, and it's just time to move them on? So we measure those kinds of things. Average handling time on the phone is one we measure. Yeah, you can get very granular. You can get very nerdy about all this stuff.
As accountants tend to do, I get that. I'll ask you in a minute, Lucy, just to finish up this section with 2 or 3 practical tips that accounting professionals can do to get started down this road or hone what they're already doing. But just before that, you're the owner of your firm. You are the Mazuma brand. What would you say to accountants that are beholden to their owners, and it's not their decision to let clients go, but they're working the portfolio, they're working the book of clients, they don't have that power? How can they change their segmentation?
I think you need to make a business case for it. So
Right.
ultimately, if you're not the one that wields the axe, you need to make the case. So you have to say, look, these people are taking up X% of my time, and I would be X% more productive if I could only deal with this type of client. And here's 4 slides which will tell you why this is a good thing. And in fact, I'd like to try this. And if it works, we can keep it. And if it doesn't, I'm going to zip it and you won't hear from me again. And just make that case. I love it when my staff come to me and don't do the classic, tell me the light's broken, and instead they come to me and ask me where the light bulbs are. And that's that's what you want to do, is go forward to partners, whoever's in charge, and say, look, I think I can improve things. And I think this will all the buzzwords they want to hear. This will increase client engagement, increase retention. You'll be able to put the fees up if we could just do this. I think that's the way you approach it.
And what leader wouldn't listen to somebody like that, an employee coming to you? All owners worth their salt would want profitability and want happy staff working with the right kind of clients.
Absolutely. You're making a case, not just for yourself as the employee in terms of your engagement, but you're making the case for the business, and make it a business case in a language they speak, and you should be listened to.
Yeah. So just to finish this bit off then, Lucy, how can people get started with this? Have you got a little 1, 2, 3 step or a couple of tips for our listeners to take away with them on grading clients?
Yeah, so a really, I say fun, I'll let other people judge if it's fun, but a good one we did when we were finding people were emotionally attached to clients was to anonymize the client base. So, and it's a little bit, you depersonalize it, but for good reason. So you segment them without the names, and you put down the categories of what whether your business type or employee numbers or turnover or whatever other metrics you're using, that data we just talked about. And then you decide, right, my A clients will be this, my B clients will be that, my C clients are that, and then these are my Ds. You do it, and then with your sneaky little VLOOKUPs, you can add the names back in afterwards, and lo and behold, that will tell you it without any emotional attachment to those clients. And that's a way to get over the hump of, but I really like that client.
Yeah, that's very good. And Lucy, just before we let you go, you're very active on social media. I've seen you and a couple of other people putting posts out like 3 heads are better than 1 and 3 is the magic number. What's all that about? What are you on with?
Oh, yeah, you're on to me, Rob. So this is something that myself, Carl Reeder, and Will Farnell are working on together, and it's essentially a coaching mastermind bonanza with the 3 of us, and I'm incredibly excited about it. I've known Will and Carl for a very long time, and it's going to be amazing to be able to offer the rest of the profession some really quite unique coaching experiences with us, because as you saw on social media, 3 heads are better than 1, and we all have approached building our practices in very different ways. And I think it's going to offer people a really unique chance to kind of really get into the brains of 3 people who've probably made every mistake you could ever make in your lives collectively, but are very happy to share about it.
Yes, and you're here established in the UK. We have an international listenership here, so it will be going out internationally, I guess, because what you are doing in your firms to make it work and want to pass on will work for accountants anyway.
Absolutely, yeah. When these aren't UK specific issues, these are worldwide, global issues that the accounting profession faces. And between the three of us, we've got that international experience as well. So yeah, I'm super excited
Yeah, and it's
to get
called
going.
Pronation. Quickly, what are some of the flaws with the accountant mentoring, coaching, and support that you see going on out there? Because there are other groups, aren't there?
Yeah, there are other groups, and they've all got their benefits. And I think ultimately, regardless of what anyone like me is going to tell you, obviously I'm pitching here, but what anyone's going to tell you is you've got to find the thing that inspires you and works for you. You do you. But what makes me really uncomfortable with some of them is the kind of my way or the highway approach. And some people respond really well to that. And there are plenty of inspirational speakers out there who kind of have that approach. But I think it leaves you very vulnerable to kind of, it's a bit dogmatic, I suppose, and it doesn't give you many options to change course without kind of having to go through a whole new coaching cycle again. I think having three heads instead of just one gives an opportunity to hear us disagree and to know that the grown-ups aren't going to are always going to agree on something, but actually that's fine and that's healthy, and that that's where the magic happens, is where you have differing opinions, because that's where you can kind of dig into and delve into the detail and figure out actually what works uniquely for you, rather than just following exactly what someone else tells you to do.
Yeah, great that it's all about what works. We're going to look forward to announcements on Pronation in the next few weeks. But for now, on our Best Practice in Accounting show, sharing with us what works and grading clients. Thank you so much, Lucy Klein.
You're so welcome. Nice to speak to you, Rob.